Financial aid. How does your income affect financial need? Imagine trying to figure out how much help you might get for college expenses. Your income plays a big role in this puzzle. When applying for financial aid, the first thing they look at is how much money your family earns. If your household income is high, you probably qualify for less aid because it's assumed you can cover more costs yourself. Conversely, if your income is lower, you might get more assistance to help bridge the gap. Income includes wages from jobs, salaries, Social Security benefits, tax refunds, and interest earned on savings accounts. But it's not just about how much money comes in. They also consider how many people live in your household and how many of them are in college. If you have several family members in school, your financial need might be higher even if your income is on the higher side. Financial aid assessments don't just look at income. They also examine your expenses. Fixed expenses are things like home maintenance, utilities, insurance, taxes, and savings. Variable expenses include groceries, gas, health care, and entertainment. These costs give a clearer picture of your financial situation beyond just income. For example, a family with a high income but also high fixed expenses or multiple college students might still qualify for aid because their actual financial burden is significant. Assets and investments also matter. If you own stocks, bonds, or private equity holdings, these are considered assets. Some investment accounts are counted differently depending on the aid calculation. Income generated from investments can increase your reported income, which might lower your aid eligibility. Managing these assets carefully can make a difference. For example, selling investments at the right time or choosing certain types of accounts can influence how much income or assets are reported. Families with private equity investments or diversified portfolios should plan their asset management wisely. Some strategies involve timing sales or choosing specific investment vehicles to reduce the impact on aid calculations. Consulting a financial advisor familiar with both investments and aid rules can help you make choices that maximize your aid eligibility. If a parent is returning to school or has education-related expenses, these costs might be deducted from income in the aid calculation, which could lower your expected family contribution. This means you could qualify for more aid if you can show these expenses. In the end, your income affects how much financial help you might get by shaping the expected family contribution. But it's not just about income alone. Household size, expenses, and how you manage your assets all play a part. Understanding these factors and planning your investments accordingly can help you make the most of available financial aid.